Hello, a very lovely good evening to once again to one and everyone. In fact, actually, I just faltered away a bit in the beginning because someone was standing down between the camera and where I'm standing before you. So once again, a very lovely good evening, very vibrant one, and I'm also vibrant today because of the fact that not a single class I have taken prior to this one, so I'm as fresh as the morning rays, and hope each one of you are equally vibrant. And with this particular hope, we come to the what we call task straight away. In fact, sometime actually I waste 2-3 seconds actually over the preliminaries, but even that is also required. So, and one student actually commented me, sir, every day you come and say actually good evening. So to that particular student is namaste from my side, correct? So we are going to start today departmental accounting. So departmental accounting after branch, actually branch we have finished up now and we are moving over to departmental. So departmental, although it's as far as lengthwise is concerned, it's pretty what we call a small chapter, no doubt about that, but at the same time its importance cannot be what we call ruled out. It's pretty important chapter, don't take it very lightly, but at the same time there is nothing to mention what we call with respect to theory. See, actually, with the passage of time, we are witnessing actually growing mall culture, isn't it or not? Even in your city, even towns, even in what we call villages, far off places, every now and then actually we find actually that new malls are cropping up, big departmental stores are actually cropping up. So this has given rise to actually departmental accounting, because nowadays what happens actually let me put up my mobile straight away. So what happens nowadays actually, because the businessmen, they are very, very what we call intelligent in the sense they have been able to analyze that time is the most precious commodity for the consumers. So they want to actually provide you every facility under one roof. And this has given rise, as I said, to the what we call mall culture. Big malls have cropped up. So big business houses have come down, big bazaars, Vishal Megamart, Reliance, Fresh, and so many actually. There might be many even in your cities and towns. In Delhi, there are a lot, no doubt about that. But at the same time, it has necessitated and it has increased the significance of departmental accounting because all the departments are functioning under one room. So departmental accounting, we may say, is widely used all over the world nowadays actually by the big departmental houses and such organizations which are providing actually all the services just under one roof in order to assess the performances of the various departments, correct? So first of all, we straight away write a little bit of theory. Actually, theory is not very important in this, to be very honest with you. So departmental is the chapter which we are going to start, departmental accounting. Departmental accounting. This is the new chapter, quite significant from examination point of view. I have already told you we simply cannot what we call rule out its importance just on the ground that its length is pretty small in comparison to branch or other chapters, but in spite of that we would see later on especially that so many topics are encompassed in this particular chapter. So we have to be very careful. Initial stages, this chapter is easy, but as we will pick up the what we call speed and what we call little bit of what we call ground, we will find actually some topics are really very, very painful, no doubt about that. So departmental accounting, first of all, you write actually departmental accounting. I'm writing actually theory this side. Departmental accounting. Departmental accounting. Departmental accounting is widely used. Departmental accounting is widely used by departmental houses, big departmental houses or organizations or organizations to assess the performances of the of the department, to assess the performances of the departments. Because of growing mall culture, 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 comma, significance of branch, significance of departmental accounting, significance of departmental accounting has grown. Departmental accounting has increased manifold. Because big business houses, they are having several departments under one roof, and they are very much interested in what we call knowing the performance of a particular branch. And if the performance of a particular department is not up to the mark, then we can definitely take some remedial actions or some stern actions or the required actions, whatever you may call it. So that is how the significance of what we call departmental accounting has gone up many folds, no doubt about that, especially during last 2-3 what we call years. Now, what we are supposed to do under departmental accounting, in order to assess the results, in order to assess the results, in order to assess the results of the respective departments, in order to assess the results of the departments, a departmental trading and profit and loss account is prepared. A departmental trading and profit and loss account is prepared. Trading and profit and loss account. Trading and profit and loss account is prepared. Correct? Now, in order to prepare departmental trading and profit and loss account, the methodology is very simple. All the expenses on all items which are directly allocated to a particular department will be debited to the to that particular department. However, indirect expenses, as you do in costing, actually will have to be apportioned among the different departments as per the guidelines what we call given in the question. Correct? So, all directly allocated expenses, all directly allocated expenses, all directly allocated expenses, all directly allocated expenses are debited to the respective department, to the respective department, to the respective department, to the respective department, all indirect expenses, all indirect expenses are allocated on the basis of given information, on the basis of given information, or given information, or on the basis of some logical grounds. So there would be some expenses which you won't be given directly associated with what we call a particular department. So in that particular case, you will have to apply the logic that how this particular expense will be allocated and apportioned among the different departments. Correct? And the rules will be similar to on the chapter which you normally do in your costing. You must have done actually overheads. So when you apportion actually different expenses among the what we call different department, you generally take some basis. Correct? So same basis you can use here. For example, rent, as you know, is divided and apportioned on the basis of area. So similar logic can be applied over here. We will see how we are going to apply it later on. Now, I may write actually some what we call more theoretical topics later on, but at this moment, so far, what we have written, we will try to actually control the things with the help of what we call one practical, so that what we have written, it comes easily to the grip. So for the same, actually, now we are picking up question number 1, and this will help you in gaining some what we call methodological ground over this particular topic. We will see that types of question which we would face later on. One type is questions related to what we call simple apportionment. Now the question which we are picking up, this relates to simple apportionment of expenses. Just go through the question, it's important to understand this. It states that trading and profit and loss account of TV and DVD company for the half year ended. Now this line itself is quite important. For the half year ended. Correct? So it means the information which has been furnished to us actually relates to half year only. Now the information states that it is given to you, so you won't be able to comprehend it easily. Don't worry about that. We will have to show some patience. After all, patience and endurance are the biggest hallmark to understand what we call any concept. Now, purchases, TV, and then in bracket it is written A. It means there might be one department by the name of A and it might be dealing in TV. Then there is another department B which deals in DVD. The purchases of these two departments have been given to us. Similarly, there is department C. If you are watching it closely, you must have noticed it is written that spare parts for services. So it could be a possibility that there is a department C which might be dealing in spare parts for servicing, correct? Then some expenses have been given. Salaries and wages, rent, selling expenses, and profits of the entire organization is also given to you. Then we move over to the other side, and you move to the what we call towards the opposite side, sales. Sales of respective department A, B, and C. So my point gets substantiated by the fact actually that there is a department A which is dealing in TV, and there is department B which deals in DVD. There is also a department C which is dealing in what we call servicing and repairs. So respective turnovers or sales is given 150, 1 lakh and 25,000. Then closing stock of these departments have been given to you. Further, it is stated that prepare departmental account for each of the three departments A, B, and C mentioned above after taking into consideration the following information. Now, the information which is furnished to us is that TV and DVD are sold at the showroom and servicing and repairs are carried out at the workshop. With the help of this particular line, I can draw out a conclusion. See here. Now we are doing question number 1. This is your question number 1. Correct? This is question number 1 we are picking up. In order to understand this question in a better manner, see here what I am doing. This is the organization actually. Say my diagrammatically I'm not very good at because my drawing is quite weak, but anyway, this is the organization, correct? You presume this is the organization. There is no harm in presuming, correct? It has got two departments. It has got two segments. In fact, one might be showroom. This is the showroom, correct? This is your showroom. Then there is another segment. This segment is workshop. Workshop. I'm drawing this inference, I'm drawing this conclusion out of this particular direction of the question that TV and DVD are sold at showroom and repairs are carried out at workshop. So I have divided the entire organization into two segments. Actually, one happens to be showroom and another one happens to be workshop. Is it clear? Since question has clearly stated that TV and DVD are sold at the showroom, so now it means actually in the showroom there are two departments. So this is the conclusion which we may draw. There is no harm in it. So this is your department A and this is your department B. Both these departments are located in the showroom, and department A is dealing in TV, whereas department B is dealing in DVD. Correct? And in the workshop, because question has clearly stated that repairs and servicing are carried out in the workshop. So logically, we may conclude that department C alone is there actually in the workshop, and department C actually indulges in servicing and repairs. Servicing and repairs. I hope there is no harm in presuming it, isn't it or not? So as per the direction of the question, now we have analyzed it thoroughly, that this is the organization. It has been divided into two major segments. One happens to be showroom, another one is workshop. In the showroom, actually, there are two departments, Department A and B, and A deals in TV and B deals in DVD, while C, which is alone in the workshop, it carries out your servicing and repairs. So after analyzing the what we call entire gamut of the organization, now we are in a position to prepare what we call departmental trading and profit and loss account of this particular organization. See here. In order to prepare departmental trading and profit and loss account, first of all, I will have to write the title, Departmental Trading and Profit and Loss Account. Departmental, this is Departmental Trading and Profit and Loss Account. Trading and Profit and Loss Account for the year ended, for the half year ended. Trading and Profit and Loss Account, correct? So, you will have to prepare a columnar trading and profit and loss account to assess the performances of these branches. In fact, so often word branch is slipping out of my tongue. The fact is that actually I am referring to department. Now there are three departments. One is A, and I have already told you A deals in TV. There is B, which deals in DVD. And another department C is there, which carries out repairs and services. Repairs and services. So columnar trading and profit and loss account is needed. A, B, and C. Correct? Your work should be absolutely neat, tidy, and spick and span. Now, how we are going to actually prepare this departmental trading and profit and loss account? In order to prepare departmental trading and profit and loss account, task is very simple. I have already written over there. All directly given expenses will be directly debited. There is no harm in it. See here. For example, purchases of respective departments have been given to us, isn't it or not? So what we need to do, we are simply going to put them on the debit side. So I am going to write here purchases. Purchases. Now purchases of department A as per the question is 1,40,700. 1,40,700. This is the amount of purchases of department A. Similarly, now we will pick up department B, 90,600. So 90,600 you will write 90,600. Then department C, its purchases are 64,500. So it is directly allocated item purchases because respective departments' purchases have been given to us. Is it clear to you? Now, after noting down the amount of purchases, now the next item is salary and wages. Now pay attention. Salary and wages, it is not given in an allocated formation. What I mean to say, it is not given that how much of salary is related to department A, B or C. So it means it's an indirect expense. It is unapportioned expense. It is unallocated expense. So we will have to now actually apportion it. In order to apportion it, first of all, we will have to go through the direction of the question. Now look at point number 2. It is delivering you actually some sort of clue. Salary and wages comprises as follows. Showroom happens to be 3/4 and workshop happens to be 1/4. So now you are going to prepare a note. Salary and wages, point number 1. So These are the notes, salary and wages. So how you are going to actually allocate this particular item, salary and wages? As per your trading and profit and loss account of the organization, amount of salary and wages given to you is 48,000. Correct? It is 48,000 given to you. Now, this 48,000, question has given you one direction, that out of 48,000, 3/4 is related to showroom. So you will calculate 3/4 of this. So 3/4 related to showroom, that is 36,000. So we may say that 36,000 has been now apportioned to showroom, while 1/4 is related to, that is 12,000. It is related to your workshop. So after apportioning this particular expense, so I am also writing for your understanding sake, this is showroom and this is workshop. Correct? Now, it is also given in the question that it was decided to allocate showroom salary and wages in the ratio of 1:2 between these two departments, A and B. In the showroom, there are two departments, as we are very well familiar now. So 1/3 will be allocated to department A. So 1/3 of 36,000 will be equal to how much? That is 12,000. And similarly, department B, 2/3 will be allocated to department B, and it will give you 24,000. In the workshop, there is only one department, that is department C. So out of 48,000, now we are in a position to say that 12,000 has been apportioned to A and B, 24, and C actually 12,000. So now we can show this expense under P&L account. Upper part is trading account and the lower one belongs to your profit and loss account. So you shall write here salary and wages. So salary and wages as per your working note. This is your working note number 1. 12,000 will be debited to department A. 24,000 will be debited to department B, and department C, it will be 12,000. Is it clear to you or not? So that was my point, that all indirect expense or simply unallocated expense will be allocated on the basis of given information. Hope this thing must have become clearer to you now. Now we will take the next one, that is rent. So I'm doing the working of rent over here. I will have to write it off also. Remember one thing, this is note number 2, rent. As per the given information, amount of rent is 10,800. Have you noted it down? Well, amount of rent given to us is 10,800. Now out of 10,800, it is clearly mentioned in the question that workshop rent is 500 per month. So workshop rent is given to you. So don't multiply it with 12, rather multiply it with 6, because half yearly situation has been given to you. So that is the reason 500 per month into 6 months will give you a figure of 3,000. So now we are in a position to say that out of 10,800, 3,000 is rent of workshop. So after determining the amount of what we call rent of workshop, now we are in a position to determine the amount of rent of showroom. You will subtract 3,000 from 10,800. 10,800 less 3,000. It will deliver you 7,800. So now you can conclude that rent of showroom is 7,800. And in the showroom, there are two departments, that is A and B. A and B. And it is clearly given in the question that rent between A and B will be allocated equally. So you will allocate equally the rent between A and B, that is 3,900 and 3,900. So that is how 10,800 will be allocated to the different departments. So now again we will come back to profit and loss account. We will write here rent. We will write in the bracket working note number 2. And then in the column of A, we shall write 3,900. In the column of B, once again we will write 3,900. However, in the column of C, that is workshop, 3,000 rent will be debited. Is it clear to you? You must have noticed it is not a very tough task. It's easy, almost like a cup of coffee for you. So selling expenses is the next item. Some information is given in the question. It is given that selling expenses to be distributed in the ratio of turnover. So again, it's a simple task. So selling expenses. Selling expenses. Now you are going to allocate selling expenses. In order to allocate the selling expenses, first of all, you note down the departments. Departments are A, departments are B and C. You note down the amount of sales. Amount of sales is given to you as 1,50,000 of department A, 1 lakh of department B, and 25,000 of department C. Now you take the ratio of sales. So your ratio will be equal to 641, if I am not wrong. Now you can allocate the expenses. So selling expenses of 11,000 will be allocated in this ratio, that is 6,000, 4,000 and 1,000. So selling expenses will be apportioned on the basis of sales ratio or sales. We will write here selling expenses, working note number 3, selling expenses. This is your working note number 3. You will write in bracket working note 3, and then you are going to put up the amounts. That happens to be 6,000, 4,000 and finally it is 1,000. 6,000, 4,000 and 1,000, correct? So far we have completed the debit side. Don't actually segregate profit. This is organization's profit, correct? Now, item given to us is sales. Of course, we are going to move over to the credit side of this particular account and we will put up the amount of sales. That happens to be 150 to A and 1 lakh to B, then 25,000 to C. Then finally it is given to us the closing stock. Closing stock of respective departments, 60,100, that is closing stock. 60,100, correct? Then we have been given 20,300, 20300. Then we have been given 44,600. So we shall write here 44,600. So now we have incorporated the every information and now we are in a position to actually find out the correct amount of gross profit, or whatever you may like to say, correct amount of gross profit and correct amount of net profit earned by the what we call respective department. Now if you are going to compute Department A, the gross profit of Department A must be 69,400. 69,400, correct? You need to compute then 27,700 or 300, let me note it down actually. That is 1,20,300 minus 90,600. It is 29,700. So 29,700, extremely sorry, 29,700. Then 5,200. So these are the gross profit given to you, and now you will bring them down onto the opposite side. You will write gross profit brought down, gross profit 69,400 is gross profit of Department A. Department B, that is 29,700, and Department C, it comes down to 5,200. Now, you will compute what we call net result. Now, unfortunately, the net result of Department A is 47,500. You must have noticed actually that profits which are given to you in the question, that is 34,500. These are the combined profits of the whole organization. Now, you must have noticed that it is better for the organization to shut down these two, what we call departments, rather than continuing with that, because it is unnecessarily reducing the organization's capacity of earning profits, because alone Department A is earning 47,500, which is much in excess of what we call the organization profit. It means other two departments are operating under losses. So that is the clue, that is the idea, that is the what we call symptoms we get out of departmental accounting. It helps us in assessing the performances, so we can take the remedial measures, and we can take the stern measures, and we can also take the extreme measures. Is it clear to you? So now we shall compute the results of the other two departments, which must be losses, no doubt about that. So net losses of Department B and what we call Department C is equal to how much? As per the given information, it is 2,200 for Department B and it is 10,800 for Department C. Is it clear to you? Now, after having completed what we call this particular topic, then we will go for question number 2. Remember one thing, we have done question number 1. This question is related to simple allocation of expenses, correct? It is not a tough one. It is quite easy. So if you want to note it down, you should. And then we are going to start question number 2. Well, we can begin with question number 2 now actually. So question number 2 we are picking up. Question number 2. So not a very tough topic, at least at this particular moment we may say and we may conclude. However, at the same time, I have already told you, importance of this particular topic cannot be ruled out, because it contains many formidable, as we will see later on, topics also. Now, in this question number 2, which we are picking up now, in this question actually we will find, in fact I will have to rub it off the theoretical section also. Question number 2 now we are picking up. In this question there are two departments, once again A and B. So in this case there are only two departments, Department A and Department B. So Department A and Department B, only two departments are given in this question. Question number 2 now we are picking up. Question number 2. Of course, departmental account is being carried out now. Now this question number 2, this question relates to interdepartmental transfers. What we mean by interdepartmental transfers, of course, you will come to know. And as the name itself is suggesting that sometime a particular department transfers goods to other department, and similarly other goods might transfer some goods to other departments. So it is nothing but transaction between what we call two departments are known as interdepartmental transfer transactions. So how such transactions will be incorporated, that we will learn from this particular question. At the same time, even this particular question, we cannot call it very tough one. Question number 2, from the following trial balance, prepare departmental trading and profit and loss account for the year ended 31st March 2007 and the balance sheet as at that date. So in the initial stages, question is not very tough. So opening stock is given. We must remember that figures are in thousands. Figures are in thousands, correct? So rupee value is in thousand, opening stock is given. It is directly allocated item, so opening stock, no problem, because this item is given in a segregated manner. Directly allocated means it is given in segregated manner. Share of respective department is given 1,700 and 1,450. 1,450. 1,450. Then purchases is given to you, department A 3540. Purchases you will write purchases. 3450. Then we have been given 3020. 3020. Purchases of A and B is given to us. Then sales of respective department A and B. So we shall write here by sales. Sales of department A this time given to us is actually, I will have to hold the book, otherwise it is becoming little bit cumbersome. So sales of department A is 6080. 6080, and sales of department B is 5125. 5125, correct? Then we have been given wages. So wages is also a directly allocated item because wages of respective departments have been given to us. So wages of department A is 820 and of department B is 270. 270, correct? Now, this is my profit and loss account. Next item is rent, rates, taxes and insurance. In the short form I am writing rent, rates, taxes and insurance. Now, how you are going to allocate this particular item? It is 939. Now see, in point number 2, something is given with respect to this particular item. It is given that rent, rates, taxes and insurance, sundry expense, lighting and heating, salary and carriage are to be apportioned 2/3 to department A and 1/3 to department B. So it means it is given to you that rent, rates and taxes will be apportioned in the ratio of 2:1. So you are going to apportion this expense in the ratio of 2:1. Amount is given to you as 939. So 939 divided by 3, 313. So 626. 626. 313. That is the figure which you are going to write down over here. Now the next one is sundry expense. Sundry expense given to you 360. So you are going to write here sundry expense. As per point number 2, even it is given to you that this expense should be allocated in the ratio of 2:1. So 360 divided by 3 will give you this particular figure, 120, and it means 240 and 120 are going to write down over here. Next item given to you is salaries. Salaries given to you, that is 300. So salaries, as per point number 2 of the question, or adjustment number 2, whatever you may like to call it, even this item need to be segregated in the ratio of 2:1. Correct? So salaries you are going to segregate in the ratio of 2:1. That is 200 to Department A and 100 to Department B. Then the next item is actually lighting and heating, which is 210. Even lighting and heating will be lighting and heating 2:1, as it is given in point number 2. So 210 you are going to divide, so that will give you 140 and 70. So 140 and 70 you are going to write down over here. Then the next one is actually discount allowed. Discount allowed. Just pay attention how you are going to segregate discount allowed. So I'm writing here in workings discount allowed. Discount allowed. So how you are going to segregate it? Discount allowed. This is your working note. Working note number 1, you can term it if you want to. It is given to you in this question, that is point number 4. In fact, point number 4, or yes, point number 4. Discount allowed and received are to be apportioned on the basis of departmental sales and purchases excluding transfer. What does this particular line means, excluding transfer? That definitely I will come to it, because we are under a habit of not leaving any word to chance. So we will try to explain that. We will also try to what we call explain the impact of the presence of this particular item. But before that, this time it is given to you that discount allowed is to be apportioned on the basis of sales. But even if this particular line would not have had been given, then you would have known, or you should have known rather, that discount allowed is related to sales, so it must be segregated on the basis of sales itself, isn't it or not? So first of all, you will have to note down the amount of sales. There are 2 departments, Department A, then there is Department B. Amount of sales of Department A is given to you. Amount of sales of Department A is 6080, and amount of sales is 5125. So now we are going to add it to get first of all the total. So 6080 plus 5125, it will give me 11,205. 11,205. This is my sales. Now amount of discount allowed. So discount allowed given to you is in the question. Discount allowed is 222. So out of 222, this much 6 into 6080 divided by 11,205. 11,205. So that is 222 into 6080 divided by 11,205. That will give you 120. So 120 you are going to what we call debit to Department A, and out of 222, this much into 5125 divided by 11,205, that will be near about 102. So that is how 222 worth of discount will be segregated between Department A and B. Correct? So discount allowed as per the working note, discount. So discount allowed as per your working note, number 1, 120 will be debited to Department A and 102 will be debited to Department B. The next item given to you is discount received, which is 65. So we pick up discount received now. So point number 2, discount received. So discount received, it is given in this question that discount received is to be allocated on the basis of what we call purchases. But the point is that even if this information would not have been given in the question, we should have had known that discount received is always allocated on the basis of purchases. Now, amount of purchases given to you in this case is how much? Amount of purchases of Department A is 3450, and amount of purchase is 3020. First we will total it up. So total will be 6,470. 6,470. We will write the amount of discount received. Discount received is 65. So out of 65, 65 into 3450 divided by 6470, that is 35, and similarly 65 into 3020 divided by 6470. This much will be allocated to Department B. So 2 departments are there. So discount received, it's an income for you. So you are going to write it onto your credit side. So you shall write here by discount received, and then you write the working note number. Working note number is 2, and then write the amount. Amount is 35, allocation towards A, and 30, this is allocation towards what we call Department B. Now the next item is advertisement. Advertisement is 368. Advertisement, it is given to you later on in the question that advertisement need to be divided what we call equally. So 368, you are going to divide it by 2, that comes down to 184. So you are going to write here 184. 184. Correct? 184. Then it is given to you in this question also carriage inward. Carriage inward happens to be 234. As per point number 2, carriage inward, which is a direct expense without any doubt, carriage inward, it is to be allocated in the ratio of 2:1. So 234 divided by 3 will give me 78. So 156 will be the share of Department A, and 78 will be the share of Department B. Now, it is given to you furniture and fittings 300. So furniture and fittings is also given, and some information with respect to furniture and fitting and machinery is given later on in the question. In fact, that information, I will just go and read it, but before that, actually, you just pay attention. Depreciation. Depreciation, some information with respect to depreciation is given on furniture and fixture and plant and machinery. So depreciation on machinery will be how much? First of all, your machinery is worth rupees 2,100, correct? Machinery is 2,100, and we will later on see that 10% is the depreciation which is needed to be provided on machinery. So amount of depreciation will be 210. Depreciation on machinery will be 210. Now this 210 will have to be apportioned between A and B as per the direction of the question, which we are going to read in a short while. It is stated later on in the question that depreciation need to be divided between A and B in the ratio of 3:1. So 210 worth of depreciation shall be divided in this particular ratio. That comes down to 52.50 for B, and then you are going to multiply it with 3 to get the depreciation of Department A. That comes down to 157.50. Similarly, there is depreciation on furniture and fixtures. So now you will write on furniture and fixture, depreciation on furniture and fixture. It is given to you, furniture and fixture is 300. It is given just about 300. So depreciation, later on it is stated in the question itself that 10% depreciation need to be provided. So you are going to provide depreciation at the rate of 10% on 300, which comes down to what we call 30. You are going to allocate it once again in the ratio of 3:1. So 30, you are going to divide it by 4. You will get 7.5. This is the share of depreciation of B. And of course, you are going to multiply it with what we call 3. So that will be 7.50 into 3. 22.50. So 22.50. So total depreciation, we can say on machinery is this much, on what we call furniture is this much, and share of depreciation of A and B is given to you. So now you are going to write it here, depreciation on machinery. Now depreciation on machinery is 157.50 for A, 52.50 for Department B. Then furniture and fixture. Now furniture and fixture, this is 22.50 and 7.50. Or you can directly what we call combine them and write it over here. Don't write the amount of machinery, otherwise it will be a gross mistake. Then we have been given sundry creditors, sundry creditor, capital account, drawings account, cash at bank. These items never figure in the what we call trading and profit and loss account. Now the following further information is given. Internal transfer of goods from A to B. Internal transfer, that's what I was talking about. So sometime a particular department actually transfers goods to other departments. So it states that internal transfer of goods from A to B. So A has transferred this time goods worth rupees 42,000 to what we call B. So first of all, you are going to write it on the credit side of Department A. So A has transferred 42,000. Remember, figures are in thousands. So you will have to write 42. Is it clear to you? Transfers. You will write 42. Because A is the transferor, so it is almost like sale for A, and it is almost like purchases for B. So onto the debit side of B, we shall write transfers, and we will write here 42. Is it clear to you? So A is the receiving department, B and A is the transferee department. So transferee department will credit it because it is almost like a sale for Department A, and Department B is the receiver. So it is what we call going to debit it. It is almost like purchases. Instead of purchasing the goods from outside, he is purchasing from what we call a known fellow. It means from other department, a colleague department, you can frame a word. Now, next item, point number 2 has already been incorporated. Point number 3, advertising is to be apportioned equally, which we did. Then discount allowed and received are to be apportioned on the basis of departmental sales and purchases, excluding transfer. See here, when we divided discount allowed, we took sales 6080 and 5125. That is the meaning that question has stated that transferred sales should not be considered. Correct? That is the meaning of this particular line. And point number 5, depreciation at 10% per annum on furniture and fixture and machinery is to be charged 3/4 to Department A and 1/4 to Department B. Is it clear? Then point number 6, it is given to us that services rendered by B department to A department are worth rupees 50,000. So there is a B department which might be dealing in some services. So it sold services worth rupees 50,000 to other department. Now this time B is the transferee department. So on the credit side of B, we are going to write 50,000, that is 50, and A is the receiving department, and we will write here 50. So as far as what we call treatment of interdepartmental transfers is concerned, that is not a very tough one, at least till up to this particular stage. Now the next point is closing stock is given to us. Stock on 31st of March 2007 in A department is worth rupees 16,74,000. So you will now write the closing stock. You should not forget. Now the closing stock which is given to you is 16,74,000. So you will write here 16,74 because figures are in thousand. So you will have to take a little bit of caution here into your stride to solve the questions. Then it is also given that closing stock of Department B is 1205. So you are going to write here 1205. 1205. Is it clear to you? Correct. Now the next point is, now there is no next point, everything has been done. Now the next point, of course, is what we call calculation of your results. Honestly speaking, I always consider it as a very tough task, so you help me out actually. You please calculate gross profit. Correct? So this is the balancing figure, of course, gross profit, and it must be around about 1530. And here it is 1520. 1520. So slight difference actually, 1530 and 1520. Then after noting down the what we call gross profit, of course the next task is to bring them to the credit side. Gross profit, I have these written figure, my calculation is not very fast, don't worry about that. So you are vibrant and you have a good mathematical mind in comparison to me. I wholly accept it. So what my point here is that actually you must calculate it of your own also, because sometime I always accept, I'm open to it always, that mistake might get creep in, because sometime when we keep on speaking and writing simultaneously, it could very much a possibility that we might actually, instead of writing 5, write 0. So you take care also on your what we call behalf. So 1530, anyway, it's correct profit, don't worry about that. 1530 and 1520. Now the net profit which we have, I'm directly taking the help of the answers, but you must make a habit of checking it down of your own, correct, and letting me know also that, sir, there is mistake in it, so that I can actually incorporate it later on. Net loss in Department A is 126. I hope it is correct, so you also note it down. Net loss in Department A is 126, and in Department B there is net profit to the extent of 602. So net profit 602 in Department B. So this is the way actually we have to do this particular question. And now we are going to pick up question number 3. And question number 3, before we actually do this question, we will take what we call off. We will end this particular session. We will continue with it. Or you want to continue me this, but with this. Some students are telling, sir, actually you please do this question also, and then we are going to take the break. Accept it. Well, I'm not going to end this session because the students down here are very adamant. So you are not allowing me to actually take my tea in a cool and calmer manner. Anyway, I have accepted what we call your request, you can say, or should I say, your warnings. So, the student have virtually warned actually me, so we are not going to leave you at this moment. Continue with, so here we accept it graciously, and sometimes I find it very, very what we call hurting that students are paying what we call full of attention, which is full of intensity. So question number 3 is nice to see your intensity. Question number 3, from the following figures, prepare accounts to disclose total profits and profits of the two departments of X and Y. So this time, once again, question number 3, it is unsolved question. I am trying to do all the unsolved question. However, most of the questions are solved in this chapter. So question number 3 is there, which you can do it of your own, no doubt about it, with little bit of help. But anyway, I'm here to do it for you. So question number 3 we are picking up. This time again, there are two departments. So first task for me is to write it off. Well, before actually I finish it off, I forgot to do one thing actually in the last question, in the heat. However, it is not required. But suppose if in the last question, question number 2, please pay attention actually. In the last question, if balance sheet is also asked, to be very honest, generally under departmental you won't be asked balance sheet, but at the same time, if questioner would ask you, then you should know how to prepare it, which is not a very tough task. So I will prepare balance sheet for you also. So solution is not yet over of question number 2. So balance sheet, we haven't prepared the balance sheet yet, so we are going to prepare it now. Correct? Balance sheet. Remember, sometimes a student unnecessarily try to use Schedule 3 everywhere. It is branch, not a corporate body. It is not a corporate body. Is it clear to you? Remember one thing. First of all, it is a non-corporate body. So you can, what we call, prepare the balance sheet in simple manner, no problem. So as far as balance sheet is concerned, this is my liability side. Because of a space constraining factor, actually, I am preparing it this way. And this is my asset side, assets. Correct? Now, we have been given furniture and fittings item, which would take place and which would come in the balance sheet. Furniture and fittings. So furniture and fitting you will write. Furniture and fitting given to you is 300. Of course, you are going to subtract the amount of depreciation. It will be what we call 270. So you will write 270 in the outer column. Then we have been given machinery. So machinery is 2100. So you will write 2100, you will subtract 210, you will write the figure, I will write it just now. Then we have been given debtors, so we will write debtors. Debtors are 606, so 606, very odd figure. Then we have been given in this question sundry creditors. So sundry creditor, we shall write sundry creditors. Sundry creditor 1860. So 1860. Then capital account is given, so we shall write here capital account. In the capital account, actually balance is 4766. 4766. This is the balance. So we will subtract the amount of drawings. Amount of drawings is 450. And then cash at bank is given to us. So cash at bank. Cash at bank is actually 1007. Then don't forget to write the closing stock. Closing stock of Department A is 1674 and closing stock of Department B is actually 1205. So you are going to add these. When you are going to add these, what figure you are going to get now? 1674 plus 1205. Total closing stock is 2879. Correct? This is your total closing stock. And machinery will be 2100 minus 210. It will be 1890. 1890. All figures are in thousand. Don't forget it. Then there is a net profit. So net profit will be added to the capital account. Don't forget it. So you will write here net profit. So net profit is 602. And then net loss will be subtracted. So net loss is 126, which you are going to subtract, and then you are going to write it in the outer column. 4766 minus 450, then plus 602, then minus 126. So your capital account is 4792. 4792. And your balance sheet total will be equal to plus 1860, that is 6652. 6652. This is your balance sheet total. And just to verify the claim, we will total this one also. It should also come to 6652. 270 plus 1890 plus 606 plus 2879 plus 1007, that is 6652. So it's correct. So figures are in thousands. Correct? So that is the situation here. So now we can say that we have been able to complete question number 2 comprehensively. And now we are picking up yet another question. And as per what we call, well, some of the students are telling, sir, you can go ahead and we will note it down. So fine. So we will then begin the next session. I'm ending this session, but we are going to start the next session in a short while. So students they do care for me also. So at least this has also hurted me a lot. Thank you so much. So I will take the tea by that time. So we are going to end the session. We are going to start the second session in a short while. Correct.